Welcome to another day in the Matrix. This is Red Pill Podcast 169, and this one will be dedicated to the What I'm Investing in Special, Part 5 in the series. So we're going to be going over about 20 to 25 different charts today. I do have a very important date to share with you that I've decoded, and it's a pretty mind-blowing decode, so I'm really excited to kick off today's podcast with that. And starting next week, we'll resume our normal altcoin voting system, so you can go ahead in the comments section below and just submit any project that we have not covered today or that we have not covered at least in the past 3 months. And you can go ahead and use the search function over here in Patreon or in Discord if you'd like to find when the last time I covered a project. You can just type in waters above, press enter, and then search the keyword of whatever altcoin you're interested in me reviewing. And if you see that it's been at least 3 months since the last time I covered it in a red pill, then you can go ahead and write out a comment below in the Patreon comments section of this podcast with the name of the project and the ticker symbol. And whatever one gets the most votes here from our community will be selected next week. We'll be back on the 4 to 5 different altcoin train. But for today, it's going to be very, very special because we're going to be going over, as I mentioned, about 20 to 25 different altcoin charts, maybe even getting into some venture capital positions that I'm eyeing down that I might be opening up for the first time. So I'll be sharing some of my conditions, whether I will or not, and why, of course. Talking a little bit more about investment thesis. And if you're brand new here to the community and you've not watched one of these before, well, get ready because it is a lot of technical analysis and could be a little bit longer than usual, but I'm going to do my best to only bring up the key points of the specific charts that we look at, because we will see similarities between a couple of the charts in when the energy pivots or when we've had our recent microcycle tops, which was pretty much March and April. So we want to just consider that when going over this many charts, we're going to try to at least share 1 to 2 key points that are unique for every chart we go through. This way, it'll make it one of the most valuable podcasts pretty much of the past couple months. So we have a lot to get into today. We're going to just jump straight into it. Again, if you're new here, welcome. So great to have you here with us. If you've yet to get access to the Discord server, just go ahead and send me a direct message here on Patreon with your Discord username, and I will reply back to you with a Discord server invite. Don't comment below or email me trying to get Discord access. I won't be able to do it that way. You must follow those instructions and send me a direct message here on Patreon and let me know your Discord username, and I will reply back to you. So now that we have all that out of the way, welcome to, as I said, a very special podcast I've prepared for y'all today, part 5 in the series of the What I'm Investing in Special, and it couldn't be any more perfectly timed with these recent lows that we've had after Bitcoin's corrected into this full moon over the past couple days. What a wild full moon that was. So we know that many altcoins have pulled back around 50 to 60% since their March, April highs, some even enduring a full 70% correction into this recent full moon, such as Proppy, which we'll be covering today actually, as it's a potential new candidate for a venture capital position for me, but we'll see in a moment on that. And before we jump into today's podcast, make sure to get comfortable, get relaxed. Grab yourself a cup of coffee or tea if it's a little bit earlier over there, or a glass of wine or beer, or any beverage of your choice if it's a little bit later. Crazy energy is going on in the world, so make sure you get comfortable, get relaxed, get your notepad out, take notes actively throughout this one, because you're going to be just hearing a lot of information fired off at a very fast speed. So definitely want to tap into what's being shared here today, because there'll be a lot of streams of consciousness flowing in different directions as usual, and you'll want to walk away from this with as many gems as possible, so definitely take notes. Now, as we've transitioned through the solstice, we're now in tropical Cancer, So you can see right here, today is June 23rd, and in the tropical system of astrology, we have moved into Cancer right around the solstice. But for those who utilize sidereal, the sun is in the sky actually in Gemini, and that will be going on till around July 16th. So a couple more weeks of that. And remember, Gemini is ruled by Mercury, the ruler of merchandise and commerce. I've also said that Mercury is the prince of the power of the air, just like money is created out of thin air, and that's what a lot of commerce and merchandise is. And also, Mercury is known as the trickster. So this time frame between mid-June into mid-July has always been a very elusive time for markets, whilst the Northern Hemisphere is in its summer. And one thing to bring up early here in today's podcast that's a little concerning, now that I've mentioned these key notes about Mercury tied to Gemini and sidereal astrology, is this S&P 500 chart. So I'm going to be loading this up and showing you something that is a little bit concerning, and it's a fib pull that we have from these March highs, which was right around the March lunar eclipse this year, and the fib pull is to the swing low of mid-April. And you'll see the 1618, or the golden ratio. Well, the recent price action over the past week has gravitated to this key level, and we're now interacting with this 1618 on our recent weekly close. And this big wick to the upside, which we'll see on the weekly candles, is telling a story, as you can see right here. So we can tell that this is concerning whilst we have a weekly close slightly below this 1618 and this big wick to the upside happening right into that Friday candle closure. Very precarious candle to have at this moment, as we've been rallying for months now. Pretty much the traditional markets have been raging to the upside since the October 2023 solar eclipse. So I think where we're at right now is kind of like make or break territory for the S&P, and I do believe the S&P is posed to go higher. I have my 5,800 target all the way up here. For those that are new to this concept or this analysis, that's just from the larger fib pull from the last Shemitah year, and topping out in January 2022 at the beginning of the Shemitah, which is what I teach, is what usually happens during a Shemitah year, which comes around every 7 years, so we won't have another one until 2028. But in the meantime, we then pulled back exactly to the end of the Shemitah. That would be our low. So this fib pull swing high to swing low has a 1618 target of around 5,800. And if you were to take from our yearly open of 2024 up to that level that I just shared, this 1618 around 5,880 points, that is a 24% gain on the year for the year of 2024. And that wouldn't be unbelievable because the year of the dragon, which we're in right now, is typically a solid year. It's always been a pretty decent year. There's been a couple anomaly situations. One would be 1940. Of course, that was at the very beginning of World War II. And World War II does have some similar things to what's going on right now, but not necessarily the same environment. Of course, definitely not the same environment when it comes to the first world, such as Europe. But there is a lot of talk of war. Everyone's heard it. Everybody has heard about the Russia-Ukraine thing and what's been going on with Russia. And of course, the talk of the town for the past year has been everything going on in Israel and Palestine. So we're not going to focus on that today, but just to say that anomaly year of 1940 definitely does have some similarities to what we're seeing right now. And another one was 2000. 2000 was, of course, the dot-com bubble, and there was a lot of weird stuff going on then. We saw a lot of speculative nonsense go up a lot. And then it followed by a very historic crash, the NASDAQ specifically taking a huge hit. But with this more local fib pull that I have over here, from this swing high down to this swing low and gravitating up to this local 1618, with this type of weekly close where we rejected off of this breakout attempt to go higher, and then were sold off to slightly below this key level. A little bit precarious. It's definitely a make or break sort of vibe. Now, this upcoming monthly close is massive because it's not only a bi-monthly, so a 2-month candle, it's also a quarterly close. So it's going to be a 3-month candle close. So this month of June that we're in right now, that's going to be finishing up in about a week from now, is very crucial. And we still have, as I said, a week left, which I'm sure will have some decent volatility into the monthly close, especially with the fact that the stock market is actively trading at all-time highs, and that's to be expected. So now, in the last couple of videos I've released, I mentioned this 5-day window around the full moon, being up until June 27th. So keep this in mind for the crypto market specifically, because this is a time frame to bottom out. And as we bottom out, we then expect a pivot. And the pivot time frame naturally is typically around these first or third quarter moons. So we have this third quarter moon coming up on June 28th. And then you would be transitioning into the new moon, which would be on July 5th. Now, this is where we're going to get into today's decode with the date that I shared, that I kind of prefaced earlier, that I brought up. And it's this July 5th into July 6th date. So let's get into that. It's going to be pretty mind-blowing, so please take notes, because even myself was shocked when I got to the July 6th date and I started making some of these connections. So without any further ado, we have July 5th. We're going to be typing that into our date calculator over here. And we're going to be connecting this to the upcoming solar eclipse, it is going to be on October 2nd. And this is a very important eclipse because it's on the Hebrew New Year, Rosh Hashanah, on October 2nd through October 4th. That is the Rosh Hashanah timeframe, making the actual day of Rosh Hashanah October 3rd. So keep that in mind. So we have combined these two dates, and they are 89 days apart. And 89 is powerful for this year because 89 is the 24th prime number. And that's our key number of the year 2024. It's also the Hebrew year 5784, and that again reduces to 24. So we have our Hebrew year synchronizing with our Gregorian year, and then we have 89 being a little bit more esoteric because, well, it adds in another layer of mathematics, which then brings in the prime numbers. And this is all important stuff when it comes to decoding. It's not the most complicated. It could get way more complicated, but I like to do this with the numbers so I can see the relationship that one number has with other numbers. So 24 has a relationship with the number 89, right? The same concept I taught in the Year of the Dragon Decoded when I brought up the number 38. So 3 8s or 888 is 24. Then you see how these numbers have a relationship with each other, even though obviously 24 and 38 are different numbers, but that's their relationship. So keep this stuff in mind. Very powerful stuff. Another example would be like cards of illumination. If you guys follow along Decode Your Reality, he talks about these a lot. And if you pull out any card, let's just say it's the 9 of diamonds, you're going to see that the 9 of diamonds isn't just one day out of the year. There's several other days during the calendar year which match with that card, and that is kind of my similar way of showing you the relationship between the number 24 and 89, for instance, with again 89 being your 24th prime. They're different numbers, just like October 2nd and March 17th could be totally different dates. But in just this quick example, and again I'm just making this up real quick, it's the theory here, those would have the same card in the playing card deck. It's just another level of another layer to the decoding system, if you will. So getting back to this, 89 is powerful not only as the 24th prime, but it's also a Fibonacci number. I also use the 89 moving average in my advanced trading course. I talk about that for those more advanced traders out there that want to have a moving average cross that I've introduced, that I think is an extremely valuable cross, this 233 and 89. But anyways, that's a side note. Getting back to this, we have the 89 revealing to us a very important connection for this particular year. And we have also Satoshi Nakamoto giving you the 89 Again, Satoshi is powerful for this year, with him, or this mythological character, being 49 years old. And I've been showing you all the 49 connections, so I'm not going to revisit those. Well, 89 and Satoshi, very powerful. But now that we have this key number connection, here's the date that I think really syncs together with everything perfectly. And it's the following day of July 6th. So you're going to see here, we have July 6th, 2024, tied to October 3rd, which is the official day of Rosh Hashanah, the first day of Tishri. So let me just show you really quickly on the Hebrew calendar. Go load this up. Go to timeanddate.com. Go to October. Type 24 in the year, country Israel, and you're going to see Tishri 1 is October 3rd. So that's your official Rosh Hashanah date. And what you'll notice is that October 3rd in the Gregorian system is the 89 days left in the year. So we have 89 days left in the year and 89 days between July 6th, this date that we're decoding. Also, what's very powerful about this is you'll see that the date numerologies of these 2 days are the same. The double-digit date numerology is 57, and what were we just talking about a moment ago? We're talking about Rosh Hashanah, which has a 57 in Gematria. And this 89 connection back to Satoshi Nakamoto, I just shared with you a moment ago. Remember, this is Saturn, and July 6th lands on a Saturn day. And it's also a date with a 21 date numerology, like Saturn has 21 in 2 ciphers. Remember, the Chinese New Year was also on a Saturn day this year. It was on February 10th, 2024. Well, we'll be able to see that these are 21 weeks apart from each other. So another 21 connection. In the Gregorian system, you would write this 210, or remove the 0 in the rules of numerology, 21. Saturn day, 21, all 21s coming back to Saturn. Now we know Bitcoin has a max supply of 21 million tokens directly connected to Bitcoin. And lastly, one thing that I found that is absolutely incredible, and this is where it starts getting a little deep, is, and I shouldn't even say lastly, because it's like 4 to 5 different connections just based off of this one thing I'm about to reveal, but it has everything to do with this number 178, because I don't see that show up too much when I'm decoding. So I decided, let's look deeper into this. And what was one of the most important dates of this particular year for the cryptocurrency market? Well, it was when the Bitcoin ETF was approved, and that was on January 10th. And you'll see that January 10th was 178 days apart from July 6th, which is the day leaving 178 days left in the year. How wild is that? And if you want your mind to be blown now, this number 178, it connects back to the periodic table with the element hafnium. And the reason is because it has an atomic mass of 178. Now, it's also the 72nd element in the periodic table, 72, like Bitcoin equals 72 in basic English ordinal gematria. ABC equals 1, 2, 3. So Bitcoin adds up to 72. Now, we're talking about hafnium, and again, 72 connected to hafnium, 72nd element. We're talking about 178 days apart from Bitcoin's ETF being approved. And hafnium has, just pay attention to this, 72, 36, 117, and hafnium has 72, 36, 117. They share 3 out of the 4 base ciphers with a perfect match in each cipher. The 72, 36, 117, like Bitcoin. Again, this is how we decode. We're tying in things specifically to each other, and we're getting these matches directly with each cipher. This is powerful stuff. So what's so amazing about this and why it's mind-blowing is hafnium comes from the Latin name for Copenhagen. And remember how this year the old Copenhagen Stock Exchange burned down on the exact date that I warned about years in advance. And then I covered it again in my Year of the Dragon Decoded when I mentioned to expect a fire ritual for April 15th this year, like the Notre Dame fire. And when this Copenhagen Stock Exchange burned down, they were calling it Denmark's Notre Dame moment. And the spire of the building was made of dragons. Again, we're in the Year of the Dragon, so this was insanely symbolic. And here we have this connection to hafnium from the Latin word or the Latin name for Copenhagen. And it has this atomic mass of 178. We have this date we've decoded, 178 days left in the year, which is exactly 178 days after the Bitcoin ETF was approved. And this might be one of the most mind-blowing connections I've ever discovered, honestly, with how many connections it has forward and backward. So we have backwards, this connection to January 10th, the Bitcoin ETF approval, and then we have forward going over to Rosh Hashanah and the Hebrew New Year, which is also our solar eclipse. And not just any solar eclipse, it's the 4th solar eclipse of our solar cycle. And what I teach, if you have this crypto decoding blueprint, you'll know how powerful that particular eclipse is in every single bull run that we've had going back to the genesis of Bitcoin. And I don't just make this stuff up off the top of my head. I'm not just pulling it out of nowhere. I have so many comprehensive charts showing you how that is all breaking down, eclipse by eclipse, solar cycle to lunar cycle. So if you haven't checked that out yet, definitely go over to watersabove.com, go over to this crypto decoding blueprint, click on this button, and then when you scroll down to overview, you'll have a drop-down menu, and on this drop-down menu, you will be able to find the course lessons labeled one by one here. And then I have a 2-part series dedicated to crypto market cycles. That's where we'll be talking about the solar cycle versus the lunar cycle and the utility of this knowledge, as well as breaking down the whole bull run for 2024 moving into 2025. And I believe I told you guys in the last Red Pill podcast, this will be available at the intro price that it's currently at until the end of this month. So with your Patreon member discount, you're only getting it for $88. It's literally the most affordable project I've ever released with this much value. So on July 1st, it will be going up in price, but for now it's in that introduction price, and you also get this Patreon member discount. But getting back to today's decode, we have this 89 code that I was telling you about for October 3rd, 89 days after this July 6th date, and also 89 days left in the year on that exact date. 89 ties back to the number 24. We're in the year 2024. This is just incredible synchronism. So one last thing that adds strength to this decode is that July 6th, the date that we've discovered, is within the 27th week of the year. And this number 27 ties back to Jupiter. Remember before we were talking about 72 with hafnium. Well, the mirror of 72 is 27. Well, this Jupiter in Chaldean has 27, and that's powerful for this year. If you watched my Year of the Dragon Decoded, you'll be aware of all the Jupiter connections that I made, including this upcoming Summer Olympics in Paris, which has the logo that has the symbol of Jupiter. So definitely go watch that if you haven't, and if you've watched it but you're not remembering some of the key points, maybe check it out again. There was some really important gems in that decode, and we've been watching stuff happen month by month that is tied exactly to some of the stuff that I was saying in that. So again, revisit it if needed. It was a very powerful decode. And for the people that have my decoding mastermind or have the crypto decoding blueprint, within the crypto decoding blueprint is a 25-minute sneak peek of my upcoming Year of the Snake decoded. So we've already seen how powerful my Year of the Dragon decode was. The Year of the Snake is even more powerful, honestly. And I'm going to be releasing that on Patreon, I believe the first or second week of 2025. So you're getting it 6 months in advance. So more than enough time to prepare for what's to come. So one thing to mention since I brought up the Summer Olympics is, since the Olympics are as exoteric as it gets, everyone in the world knows about them. Consider that it happens, I'm going to be bringing in tropical astrology because that is, again, more known. It's more exoteric. So because the Olympics are so exoteric, just consider that the Olympics are happening during tropical Leo. Keep that in mind. Leo the lion, ruled by the sun, and this ties to the mythology of the dragon. And I also brought this up in the Year of the Dragon Decoded. So that is a very, very important time frame specifically for the dragon year. Don't sleep on this, because every year of the dragon, this time frame of tropical Leo is one of the most bullish times for the dragon year, which we're in. So keep this stuff in mind. But honestly, at this point, okay, let me kind of pivot on to a couple of things just so we can get to the charts. I think it's really important now, about 25 minutes into our episode. Just going to say that, honestly, the July new moon to me seems very powerful. So we're going to kind of take everything I just reviewed and I'm going to share my opinion. Okay. So the July new moon is powerful. In tropical, it's a new moon in Cancer. Cancer is ruled by the moon, and July 5th into July 6th, the dates we decoded are during the new moon. Remember before we were talking about the number 57 because July 6th has the 57 date numerology. We also have Rosh Hashanah with the 57 date numerology. We have Rosh Hashanah in Gematria giving you this 57 full reduction. And speaking of Cancer, because we have the new moon is in Cancer in July 5th into July 6th, well, moon gives you 57. Again, the moon rules Cancer. But look at how we have 57 and 21. Just like July 6th has 57 double-digit date numerology and 21 standard date numerology. So during this time, we could have a serious pump in the markets because of the timing of this and the connections. So that's kind of my take on it all. I believe after we get through this third quarter moon ahead, which is about 5 days away, we'll be then pivoting into our monthly close for June. We should be in a pretty decent posture heading into the beginning of July, which then I think we will start to see a very significant energy enter this market around specifically the new moon, July 5th into July 6th. That decode that I just shared with you with hafnium and all that other stuff, I mean, it's unbelievable how many connections I just shared for one single date going forwards and backwards. So the only thing I can say though is July 6th being on a Saturday, the traditional markets will be closed. So yeah, maybe July 5th on that Friday, if that's crazy bullish, we can see something special happen on the 6th for the crypto market. But even sometimes when we have a really bullish week, let's just say it would be from the beginning of the week in July till the Friday market close right here on July 5th. If that's super bullish, and even if Bitcoin was sideways for the 6th and 7th that weekend, we could see altcoins do crazy stuff at that time. So just keep that in mind. It really seems like this corrective phase is coming to its finality into the monthly close. We should be pivoting through the monthly close, and then into the first week of July we should start looking pretty good during the new moon time frame, and then you have the specific date connection of the 5th and the 6th. So now let's kind of wrap up those thoughts just really quickly, and then we're going to be heading into the Bitcoin chart, starting out with our upcoming weekly close. So I said over the next trading week we can be in a bottoming out phase. We could even have some flash corrections happening at any time, just like we had all throughout this past week that we just traded through the full moon. So don't be shocked if we see any flash corrections. A lot of that stuff could still be bought up intraday. But let's get over the Bitcoin chart, starting with our upcoming weekly close. All right. We have a lot of charts to cover. I'm going to do my best, wrap up what's happening over here in Bitcoin land. And we could see this key trend line that we had, this white trend line across the chart. I'll keep this fib, but just keep this trend line in mind. So this is the selling climax of our last bear market. We're at the absolute lows. Here, this correction down to this trend line was during the March 10th Black Swan event, the retail banking crisis with Silicon Valley Bank. Then over here, we had the start of our solar season, so we traded perfectly into the start of our solar season. Then we had a sideways phase into the next solar eclipse. After that solar eclipse, we took off, but you see how we had this interaction of coming back to this and then popped and then fell through it. Once we fell through it, we gravitated back to this trend line, had a bunch of resistance on it, flipped it for a moment. Then when we went back below it for the last time since, it was around the Bitcoin ETF approvals. So this met with a bear trap. After that, popped off into our current all-time high. And then now we're kind of struggling to hold that level and we're back below it. And what we've noticed is every time we're below this trend line, it's an incredible buying opportunity. Even when we touch on this trend line, it's usually a great buying opportunity, which we can see was May 1st and May 2nd. So in the last couple decodes, I was talking about this 49-day connection from the highest daily close of the year. 49 days over was the lowest daily close of the year. In the microcycle in this sideways horizontal trading range. And then 49 days after that ended up being this date of June 19th. If we were to take from this following day, it's kind of bringing you into the same sort of energy because this day was flat. But needless to say, it was in anticipation of an extreme in the data. And that's what we got. We had a couple more days of down, and I even said through June 27th, I could anticipate more downside just because of how weak everything has been lately. And the second reason is because we had 4 clean rejections at the 71.5K level. So that's huge. But this trend line aside, let's look into our weekly close. As mentioned, we're going to be turning off the drawings, and we're just going to turn on our moving averages. So we've now been below the 8 simple moving average for the whole week. Not looking so great there. Let me load up the EMA band, and this is something to watch out for. So you see this blue moving average is the 13 EMA. This is very important. Keep an eye on this for the upcoming weekly close because Bitcoin has not closed below this moving average in over 8 months, going back to the October solar eclipse. Now, the 21 exponential moving average, it sits at 61,500. So you can just look right there. Now you'll see it's 61.4, so we just round that up. That's a critical level to hold for mid-cycle corrections, such as the one we're experiencing now, even since this dramatic rally that we had in Q1 of this year. So as I mentioned in my last couple updates, this level of 61K is really like the line in the sand for Bitcoin. And if it's the line in the sand for Bitcoin, then you can say it's the line in the sand for the entire crypto market. Because if Bitcoin was to start closing below this 21 EMA and slid further into the mid 50s, your altcoins are going to get demolished. All right. And that's just the way this market is. That's the way it goes. So I'm going to be covering a lot of these ideas now because we're going to be going over like 20 different altcoin charts. And that's important that we're real with you here. Like the truth is what sets you free, even if it's uncomfortable. It's why I've been a little more hesitant to accumulate, but also everyone should be more than well aware that I did all of my accumulating around this horizontal trading range to finalize my accumulations. So I was buying all throughout this phase here, and I really kind of just stopped over here. Then I did some de-risking around 47 to 53 Bitcoin, and then I rolled over all of that Bitcoin, all those Satoshis into alt venture capital positions. And I'm fine with that. Like really my portfolio is a lot more balanced now, and I don't have this huge belief that Bitcoin is going to do like crazy numbers in this cycle that some people might think. So I have my own investment thesis. I'm not trying to persuade anyone into believing that I have some sort of truth about what's to come, even though I do have a very thorough all-time high analysis inside of my crypto decoding blueprint, and I could entertain some multi-six-figure numbers, but I'm not going to be betting on that. And I hope that makes sense to everyone. Just to talk investment thesis for a moment, I do believe Bitcoin's hitting 6 figures this cycle. I do not believe that the top is in at the sub 100K level. I am open-minded to a multi 6-figure target, so something like 200 to 300. and I have my reasons why. It's very, very thorough and covered inside of this crypto decoding blueprint, but I can't really be breaking that all down now because that requires so much context and charts and real raw TA to show, and that's not what today's episode is about. So, needless to say, I have all those comprehensive charts and everything laid out so nicely, so organized inside of that crypto decoding blueprint. And for the price that it's at, $88 for Patreon supporters, I mean, just those couple of course lessons are worth it. Seriously. And anyone who's gone through them can vouch for it, I'm sure. There's an incredible amount of backup in those charts that I'm sharing. It's not just my opinions, but I am very clear when I delineate my opinion versus what's going on in those charts. So I've shared some of the things that I think are crucial here. I do not think we're going to top out below 100K. I do see over 100K, and I do entertain 200 to 300. And I have my reasons why, plenty of reasons why. But to get back on track with this, even if Bitcoin was to make it into like 150K, there's going to be way more money made in the altcoins. So that's kind of why I decided to do my de-risking in Q1, started to roll over. And if I am going to do any more new accumulations, it has to be for a reason. And with a 60 to 70% correction in a lot of altcoins lately, that's a pretty damn good reason. So I'm just being patient right now because I'm not trying to catch the exact absolute bottom. I'm a sophisticated investor, and I feel like you can't even accomplish buying bottoms. It's not humanly possible, and it's just too stressful to even burden yourself with attempting to do that. So for me, I wait till I see some confirmations in a bottoming structure. And right now, the reason I'm telling you all of this is because seeing Bitcoin trade at the 13 EMA, slightly below it, and this is like a critical level, that doesn't give me confidence that we're just going to pop up right now. So I do have a feeling that a 62, 61K Bitcoin could definitely be in the cards over the next week, maybe 2 weeks. I don't know if it'll make it that far, but at least the next week. But remember, I mentioned weeks before we even had this correction that anything at 63 to 64K, which we're literally trading at right now, would be a healthy correction for Bitcoin. So this is healthy right now. And the only time I could see a deeper correction below 60K, still maintaining my bullish bias, would be with the correction down to the 200 moving averages. So I talked about this recently. If we were to get a flash correction down to the 200 MA or EMA, followed by a quick bounce, then I would be okay, but if we would probably still need to get bought back up above 61K. If we were to start closing a weekly candles at 57 and 56, then lights out. And I even shared that on my crypto decoding blueprint. I would not feel good about that. I think we would then be seeing something very dramatic, kind of like a spring phase for the altcoins because of how so many altcoins have already corrected so much. So we're open-minded to that theory. And we do need to talk about a couple things that could be pointing to a little bit more corrective phase. And let's start with the 5-day chart, since I already brought up the fact that the weekly we have hovering on this 13 EMA. That's a little bit precarious. Now we have the 21 exponential on the 5-day is holding, and we closed that tonight. So holding that level would be good. Closing below that would be not so good because we have not closed below the 21 EMA on the 5-day chart since the same time frame, since the October solar eclipse. So yeah, we're really kind of squeezing and squeezing and squeezing, and Bitcoin is losing a lot of its volatility. It's low volatility right now, which means it's posturing for a very explosive move. That's typically how things go. We needed to have a boring phase, guys. We got so exciting in the beginning of the year, and that excitement typically is when all retail starts to FOMO in, and that's a trap. It's very common when you start seeing extreme greed in the market. That's a time to start de-risking. I mean, even if you're only a little bit in profits, it's getting you used to like how to react opposite of what you would typically normally react with. I mean, shit, if you made 50% on an altcoin, and even if it went up 400, 500% afterwards, wouldn't you feel a lot better than somebody who FOMO'd in and then now is dealing with their portfolio being 60 to 70% down? I mean, just ask yourself, aren't you happy you at least made profits? Now, I'm not here to tell you to sell. You have to look into the tax situation in your country. I mean, if you're American, you have to deal with capital gains taxes, of course. And I'm not telling anyone to sell at a 50% gain. That's not the advice here. I'm just saying that you need to look at it opposite of the emotion that the herd is getting sucked into this market with. So when everyone's FOMOing, you should be de-risking. Just saying. And the next phase we move into this market, if we really do move into that more explosive phase to the upside, you're going to be seeing all the people that have been panic selling over the past 3 months and definitely last week. They're going to be FOMOing in after the market has already went up 100%. That's just the nature of retail investors. They're very emotional. So let's go to the daily to kind of wrap up this analysis on Bitcoin. And we do have something to talk about, which is, we already discussed the wolf cross, which is this 55 and the 8, where the 8 or the yellow moving average has crossed below the 55 simple moving average. That is a bearish or a kind of a downward posturing signal. So once we have confirmation, which we got the following day, the cross was on the solstice, and then the full moon day, we had a pure confirmation. We had 5 red daily closures in a row. And this Saturday is very low volume. Of course, the traditional markets are closed. We'll see how things go tomorrow. But this isn't looking so good, especially with the EMA band in a bearish posture. So we have one downwards pressure cross confirmed with the 8 below the 55. That's the wolf cross. And then you have over here, you have your EMAs where the 13 is below the 34, and they are now in a bearish posture. So over here we see 13, 21, 34, but now they flipped where the 34 is at the top and the 13 is at the bottom. It's not looking so good, especially when you combine it with this other cross I just mentioned a moment ago, and all these daily closes below the 8 simple moving average. So this tells me that on the weekly, if we were to close this week around where we're at now, or even get a little bit lower, like around 63,800, 63,900, that would show weakness, and that would tell me that the 21 EMA could be back tested one more time before we continue to the upside. Let's go over to Ethereum. There's not too much to say about ETH right now. It's just following the Bitcoin play. So the weekly's looking pretty good for ETH. Remember, we had this big speculation candle because of the ETF approvals. Even though we went higher before the ETF was approved compared to after, like we basically immediately started rolling over right after Bitcoin, right after the ETH ETF was approved, and it's still not launched yet. So this is another reason why I'm bullish on July and August, is I see that approval being healthy in a sense after we've had such a lull period since Bitcoin has topped out in March. That like long 120 to 130 days of sideways, it's time to make a move, you know? And I do think that the Ethereum the launch of the ETH ETF is what would be helpful to get some more attention back in the crypto market. Okay, so we've now been holding the 8 simple and the 13. That's fine. That looks very, very nice. A lot better than the Bitcoin weekly chart, but again, it's triggered by this speculation candle. The daily, now we're coiling up, and this is starting to flip into a more bearish posture with all of these daily candles closing below the 8 simple moving average, and then we have the 55 squeezing. So any closures below the 55 simple for Ethereum signals another move to the downside. So then you would anticipate 3,200 is in the cards. 3,250 would be the next lower level with any closures below the 55 simple. Now let's look at XRP. Not a whole lot to say because there's been no update in the past week. So last week's analysis is the same for this week. And some people reached out to me and they said, why are you so bearish on XRP? What's the problem? Like, here's the thing. I'm not going to lie to you. Like, I see what's going on in these charts and I have to report. All right. What I've been saying for the longest time about XRP is what? I've been saying you need Bitcoin price discovery. Stop worrying about the month it happens in. Stop Stop that, okay? Just look at the key indicator is Bitcoin price discovery. That's what's next. When Bitcoin goes into price discovery and starts trading into 64 or 74, 75, especially into 80K, that's when you're going to see this whole alt market move in synchronicity. And when XRP moves, it's typically at the end. It waits and waits and waits, and then it has this skyrocket kind of energy where all of its suppression bottles up and then it just gets released like a volcanic eruption, okay? Keep your mind on that indicator of Bitcoin price discovery is necessary for XRP expansion, all right? Don't get lost in that. And if you're discouraged, well, then you should have a more balanced portfolio, because the only time you can be discouraged is if you're overly exposed to this asset, which you should have never been. Yes, it's my second biggest position, but I do not have too much exposure in it to a point where I get discouraged if it's sideways and down. That would not be the right way to invest. So you need to have a portfolio breakdown that's in harmony with where you're at with your goals. And if you were sucked into this idea that you're going to see a $589 XRP and you made 80% or 90% of your portfolio XRP because of that theory, well, then who can you blame but yourself for believing in mythology and then literally basing your entire investment thesis around that, right? It's time to take personal responsibility and stop getting mad at people who are just telling you what's going on. And with how many days this thing's been sideways, what do you want me to tell you? It's like trying to tell somebody the weather in a place that's 70 degrees and sunny every day. In this case, it's winter all the time. Season will change soon. You got to wait till Bitcoin moves into expansion mode, and that's right around the corner based on many metrics. So the biggest and most important metric for me is the October solar eclipse. Typically 2 months before that, we rise into that. So if we were to do some quick maths and we were to look at this being your solar eclipse and we were to look 60 days before that, that would mean by the August new moon through October 2nd, it should be a very incredible time for Bitcoin. Now, I know some people might disagree with this. Some people might be looking at this market from other vantage points, and that's fine. But this is what the solar cycle shows us every single time. After the third solar eclipse, it's normal to see corrections, but leading into the fourth solar eclipse, it's very normal to see us pump into it. Very similarly to how we had between the second and third solar eclipse, we pump into that. And if you look at the charts between October 2023 into March, late March into early April solar eclipse of 2024, every altcoin moved up. It's no different. So again, with the XRP play right now, I can't update too much. I gave you all the key levels in the last podcast. Now let's get over to our other altcoin charts. Couple quick ones is Avalanche as a potential new venture capital play. Again, not saying that I will 100% get into this project. I'm just letting you know it's a potential project that I'm looking out for. And we're really selling off lately. So we have from this local top here in around the lunar eclipse, 60% correction. So a big corrective phase. And we're now back to the early December level. So it's been 200 days. I mean, technically, we could slide even more down. But let's look at our fib pull and see what's going on here. So we have a larger, let me delete this. We have a larger fib pull from this swing high, last all-time high, to this swing low. And we've now come back to the 382, and that's very common. After you get all the way up to this golden pocket, which we perfectly tested the 702 fib, we tend to get rejected there. It's very normal on these large automatic rally phases. And then we come back to the 382 minimum. All right. Now, if this was to go deeper, then you would have the 236 target. And that's where this fib pull comes into play. I pulled the fib in reverse from over here, this level, over to the current high, which was around the macro 702. And it shows me a target of around $18. And we have a couple of bounces here at around $19. And then we have the 236 at 1670. So let me just show you a quick range. And now we're going to take a little more time on these. I don't think we could get this deep, but I'm just letting you know these mid-cycle corrections can get pretty bloody. All right, so if we were to continue to slide down, there's a potential to get to this 618 in reverse, and then as low as this 236 fib. And I know that's heartbreaking for many, but what I also mentioned a moment ago is the 382 is good enough. So what can we do with this information? All right, well, you would have a DCA strategy where you could break up into 5 buys. You'd start the first buy now around one of the key technical targets, and then the other 4 you would have in increments going from this 23 range down to the 16 range. And you would anticipate that on the more extreme part of the data to have the least amount of your order set, because it's less likely for that to be accomplished. And then you don't want to have it where most people get very greedy and they put like 80% of their buys at the lowest level, and then none of those contracts get picked up. They never get positioned. So you want to have, out of the 5 buys, the 3rd, 4th having the most. Put like around 65 to 66%. So 2/3 of your buys should be right around there. And then the first couple are just you kind of like nibbling, and then obviously the extreme in the data. You don't want too much down there, but you could have something there to pick it up. And now sometimes you swipe through all of those levels in just one big liquidity event. And sometimes that's what happens around this stage of the cycle. If we were to go back over here, you can see a mid-cycle correction of 80% is possible. Okay, look at this. It went parabolic. It went up fucking 2,000%, and then it corrected 80%, and then it went up again 1,500%. Okay, we're in this moment here. This is designed to shake you out. All right, that's pretty much what this is now. As you can see, we had this thing went up 600%. Now it's gone down 60%. It's just really big altcoin swings. This is normal. Now, what I just covered here, I'm not going to keep going through in every single altcoin. I'm just giving you an example of a lesson that you could apply. Talked a little bit about the DCA strategy, and now we can move on. So Avalanche is one of those projects that I'm thinking about getting into potentially. Now, the next one would be Proppy. Again, similar situation. We have a 70% full correction effectively, a little bit of a bounce, but now I like the fact that we made it down to the 618 and had a really nice bounce at that 618 level. I would love for this to build a little bit more structure around $1.30, 130 to 135, and then we'll see. But Proppy likes to move like this. And the one big red flag for me is how when we moved up to this level in the past cycle, we had this like triple top deal at around $3.40 to $4, and then we just cascaded after that. I don't love how it hits this level of around almost $4 and then has these big corrections after. It's like it's so ritualized looking. And this was unhealthy. This whole move right here was extremely unhealthy. So this is a candidate, in my opinion, for an almost 80% correction. And what's interesting is an 80% correction brings you down to the 382. That doesn't mean I'm going to wait for that. I want to see what Bitcoin does over the next couple weeks, because if Bitcoin comes down to like 61K or around maybe even 60K, or does that extreme push to 57 on the 200 EMA that I brought up, well then yeah, I mean, I suspect at least a sub $1 Proppy, and that might be a good time to start getting positioned, because anything over a 70% correction, it's very, very dramatic. Just as a pump like this, 700% in 2 months is very dramatic. Think about it in both ways. You want to take advantage of making decisions during the drama. Of course. So yeah, Proppy, another candidate for that, although not a lot of, I don't have the full chart history here. I did look at the full chart on CoinTrader Pro. It's just, we have too many altcoins to get through today for me to, give it that much attention. But just bringing it up, this Proppy play is interesting. Part of my investment thesis would be getting into tokenized real estate, as that is part of the future, and this seems like a solid play. Now the last one, and this is a very apprehensive one for me, but I'm considering it solely because when I got into the crypto decoding blueprint and I started looking more into the code of Solana, and I did a full decode on Solana, which is included there, it made me get interested. And I shared something in that decode where I said, I believe the next. Now, again, I'm just letting you know, it's not like I'm not hiding anything from you. So I mentioned that Solana, the next potential ETF I see being approved is a Solana ETF. I brought that up inside of the crypto decoding blueprint. I see that happening even before XRP, obviously before XRP. And if that was to happen, there's something really symbolic about the trinity between Bitcoin, ETH, and Solana as being the first 3 ETFs approved for blockchain for these cryptocurrencies. I can't get into all of that now. Again, it would require like a whole decode, which I already have in the crypto decoding blueprint. Absolutely fascinating and very, very esoteric. Has a lot of layers into the mythology, and yeah. But that really intrigued me. And then I started seeing this structure here where we had a rising trend line, another rising trend line, and then we started to break below it recently into this full moon. And now we're back at the 0.5 fib. And what I told you before is typically when we make it to the golden pocket for the first, wait, sorry, let me adjust this. This is not right. Yeah, we hyperextended above it, excuse me. So we have this in the proper way now. It's in a logarithmic fib pull. You want that when you have this much chart history. So we made it all the way up to the 888. We had this high, lower high, lower high. And we've made it back to this horizontal support, which is right around the top of the golden pocket. That's what I meant to say before. And now I'm kind of waiting, because if we slip below this, there could be a deeper correction incoming, and that would be in alignment with Bitcoin. But it seems to be that $100 Solana would be a very solid level to get in for where this could potentially be going in the future. But I got to admit, and it's something I've said many times, this thing is overvalued for me based on where I like to get involved with positions. I don't like buying something that's trading at the golden pocket already. The same thing with the proppy play. Let me get back to that just to show you where that's at in the grand scheme of things. Okay, it's at the bottom of the golden pocket now. I feel a little better about that, but like still, these are not me saying I'm committed yet. I'm just looking at these 3 projects. They're interesting. Avalanche is a lot more interesting because of where it's at in the, like I said, it's made it back to the 382 after the rejection of the 702. I like that. That's a really dramatic sell-off. That's typically when you want to start getting involved in a project. But Solana, I'm not, because it's just too high. Definitely was fascinated by the decoding stuff, but you can't just make all of your decisions off of you having some epiphanies. But yeah, interesting project. I might get a little bit of it. And I don't think it's wrong to have 5% to 10% even of Solana. And for those out there that have already big positions in Solana, hang on. There's probably a big future ahead, especially if this ETF gets approved. But we just have to see. That's again speculation. Now, let's get into the projects that I do hold. Dogecoin. The first one so far. Couple of crazy trend lines here, but let me explain. So we had this first trend line over here. We saw bullish energy kick in after the October solar eclipse. We back tested here. And then now lately, we've already back tested again with a quick buyback. Here we had a rising wedge pattern that always breaks bearish pretty much, especially when it's a downtrend leading into the rising wedge. So I'm going to go ahead and delete that live on screen for you guys so you can just see that I don't really love patterns so much, but whenever I identify one that I believe will play out that way based on other technicals, I'll kind of just assess and take it from there. Another thing is from this local top here, and all of these resistance rejections, we've now broke out above this and back tested this as a support. So because this is in alignment around the 382 to 236 level, and it's hit back on one of these lines that I drew out in my last one I'm investing special, then this is great. This is pretty much where I've got my first buy-in on Doge. It's like right around 12 cents. And even if I don't entertain price discovery, we still have about 500% to retesting all-time highs. And this is one of the oldest projects going all the way back to like, what, 2014? Yeah, we have chart history all the way back to 2014, and it always hits the 1618 every time. Even in the last cycle, we hyperextended above it. So our 1618 in this cycle is around $4, and that's why I feel there's a possibility for Dogecoin at $4 in this cycle. So where we're at right now, between the 382 and 236 is one of the best last minute buying opportunity levels. So that's great. And I'll see if I get a little bit more, maybe more into the 11-cent range, if there is to be a little bit deeper correction, maybe to fill in this wick here from June 18th, then I'll consider to add a little bit more, but it's not really necessary right now. My bags are packed. Now let's go to XLM, because I didn't cover that in the last what I'm investing in special, even though I do have it. And this one is really draining out. So we have this fib pull here, swing high from May 2021 down to the end of the year of 2022, and we're still way below the 236. So this is kind of in a weird situation where it has little expansion. It's returned back pretty much near the bear market lows. It's not a very convincing play, but as I told everyone millions of times, this thing runs with XRP. So if you're going to have a big position in XRP, which would be 15 to 25% of your portfolio is what I would consider big, then you should have a venture capital position in, or you could have, is what I should say, a venture capital position in XLM of around 5%. This is not the project to have a huge position in, okay? It just kind of rides the wave of XRP. So I don't have too much of an update on this per se, but I do like the below the 236 thing gives me confidence that at least I'm buying low. Because if I go back to last alt season, that's 700% to retest those highs. And then if I go back to the absolute all-time high, it's around 900, almost 1,000%. So having like a 3 to 4% position in this, in also having an investment thesis that speculates that we're gonna see a new all-time high for XRP in this cycle, well then XLM rides the wave and you get to take advantage of that. And this is a project that I don't see going to zero for several reasons. Now let's go into another ISO 222 compliant project, which is Algorand. Another one that's kind of just really not getting a chance. Also below the 236, similar to the XLM chart, but one big difference is that it's as low as it was during the C19 crash. So this is one of those projects that I would not put like more than 2% in. Even that is enough. Just a venture capital position, have fun with it. Also kind of riding the wave of the XRP, XDC kind of conversation, which that'll be the next project we cover. But this is not the best or prettiest looking chart at all. This is more a project that's going to do really well when the crypto market and blockchain technology gets heavily regulated. So remember that. And that's a key takeaway from this. Also, by getting in at these current levels, you're looking at a retest of about all-time high retest of about 1,800%. So that's incredible. If we were to make it back up to the mid $2 range, incredible. It's an incredible, and you have this distributional top and this distributional top, everything around 172. So that's at least 1,000%, and that's a very what should I say, conservative jump for the next alt season. So I feel good having a venture capital position in this project because of that too. Now we're getting over to XDC. Wow. Okay, that's huge. XDC's made it back to the 236. So what do I teach? We made it up to right around the 702 of the golden pocket. We typically at least come back to the 382, and if we can make it down to the 236, that's awesome. Now, if this slides lower, that's going to be worrisome because we have to hold the 3 cent level. You can see that this was a horizontal support over here for a pretty decent amount of time too. I would say this was at least 2 months, right? 1 second. Yeah, 2 months. So we've made it back to those levels, and that's right around the 236. 3 cents needs to hold. Now let's go back to the last cycle and see what happened. So look, in the last cycle, we had a much healthier kind of breakout where we made it up to the golden pocket, and we traded inside of the golden pocket for 250 days. So that's a really solid amount of time. to be trading at such levels. So the fact that we broke out to the 1618 is amazing as well. It tells me that in the next cycle, I could definitely see us getting close to that. I don't know about a full $1 for XDC, but I do entertain there's a possibility to make it up close to the 1618 like we did in the last cycle. Although the way that this has been trading since it hit the 702 is not looking good. This is a very choppy and unsophisticated chart with a lot of these upside wicks, and it's just too retail vibe for me. So keep that in mind. Not the prettiest thing, and it looked way more interesting on the last cycle's breakout, but the last cycle did not look pretty either. Look at this chop. Really not good. This was your C19 crash, and this was the rise out of it. So this has been a lot more arduous in its sell-off, and this has been going on since July 2023. So that's a full year now that this has taken to come back to the same exact level. This should be done correcting. I don't know if this could go down much more. Yeah, it's pretty low. Like if you're looking at the 5-day RSI, it's getting down to 35. Yeah, 35 on weekly RSI. This should almost be done correcting now, and it's at a perfect level. So I might get a little more XDC actually. I like when things are at the 236, especially this late into the cycle. So now we're moving over to Hedera H bar. Whew, okay, we made it back to the 236 as well. So kind of the same story for XDC is the same story for Hedera. Getting anywhere around the 236 at this stage in the cycle. It's also similar to the way that the correction happened with Dogecoin. Between the 236 and 382, I like that at this stage. And we already made it up to the 0.5, had this flash to the upside rejection. I remember that because nobody shut up about it, and I was telling everyone to please relax because we're not there yet. Anyways, yeah, this is a really key support level. The only time I would get worried is if we started closing below 0.67. Or just say started to close below the 236. We have this trend line that could be supported, which from the beginning of 2023 over to October solar eclipse, it was about 300 days. Going into the end of this month, that would take a real big push to the downside. So unless Bitcoin in the week holds, let's just say, I should actually say if Bitcoin was to come down to the low 60s, like 61 or 60,000 flat, then sure, we could slide down to 5057 or something around there for Hedera, and that would probably be as deep as it goes, and that's normal. Look at this, how we had this final correction right here before this thing breaks out in a straight line. So that's just the way markets like to go, man. You see right here, this final correction before we started a breakout right here, deep correction before a straight line breakout. That's how altcoins like to do it. They like to have this really like arduous chop and then a last second drop to shake out the weak hands before continuation. Now we're making it over to Polygon Matic. Wow. Okay. Perfect. 236. Just like I was telling you before, we already hit the 702. We came down to the 236 in fall time of 2023. We made it back to the 618, rejected again, and came right back to the 236. So this is building a huge horizontal trading range, making me very bullish actually on how this breakout can go, because the more it coils up and the more structure it builds, the nicer the breakouts are. And they're very explosive. But this 236 is a key level. Anything around 50 to 60 cents for Matic is awesome. So yeah, definitely still in buy territory as well. It's a great time that I did this podcast right now instead of holding off a couple weeks. So many projects are still in buy zone. Now, we're moving on to Multiverse X, EGLD ticker symbol. Let's see what's going on here. Okay, so we had this kind of megaphone pattern descending. Oof, we broke below a couple of key trend lines. So we had this trend line going back to the last backup phase of 2020. Backup phase. And then back testing on the absolute lows of the bear market. And then now we broke below that. So what could be in play for this particular project is a double bottom. Kind of this bottom. We might even have a higher high double bottom. That's really, really nice. It's a very bullish structure. which becomes a macro M pattern or W pattern. And right here, this is an M that broke bearish. So this is micro double top setup below the 382. And what I teach is if you're getting rejected below the 382, then you're not really in what is called an automatic rally just yet. But that's another kind of lesson to get into. Needless to say, this has been really, really coiling up in these lower levels, and it hasn't had that full like expansion into the golden pocket like we've seen with a couple other altcoins, and no tests at the 702. So right now, just from where we're at to get back to the prior all-time highs, 1,800%. I love seeing things like this because it tells me that even if I was to get into these projects and they just got close to their last cycle high, well, I'm making what takes some people decades in the stock market to even get close to. You can make that in a couple months in a crypto alt season. So yeah, this is an insane amount of upside potential, and you don't even have to worry about price discovery, which I like. Now, I mean, we'll see how this goes, but one signal that's a lot nicer for this chart in comparison to like the Algorand chart is this is the C19 crash. And look at how much higher this is compared to the C19 crash. It's 3,000% higher, as opposed to Algorand is like still trading currently near the March 2020 lows. So I feel a lot more confident in this, that this has been holding its supports and expanding over time, but it still only thrives in an alt season, truly. And when we're out of that energy, it's a shit coin. So this is why you need to have less than 5% of stuff like this in your portfolio, and you need to be fancy with it during alt season, because these things can go a lot higher than you anticipate, and you might not even want to sell it because every day you're waking up, it's just going higher and higher and higher. So you need to have a solid exit strategy on stuff like this. And during bear markets, it's going to be boring, it's going to be choppy, it's going to be chaotic. So let's move over to Jupiter. Project I'm really just getting into because of the Jupiter connections for this year of the dragon, as mentioned earlier. It's right at the level that I bought it at last time, which felt wild to buy on that day, April 13th. Some of you might remember it was a crazy flash crash in the markets, drone strike from Iran to Israel, and geopolitical stuff on a Saturday brought a lot of selling pressure to the crypto market, and I bought during that day. Bought a bunch of venture capital stuff, and wow, we pierced below it. This had a really bad day on June 18th. Interesting. It is what it is. We've now started to build some structure, though. I don't love being in stuff that's brand new. You guys know this. I like to have some chart history, but you can't just completely disregard new stuff in a new bull run, right? If you would have bought anything new in the 2020 bull run and sold it during the peak of 2021, you probably at least made a minimum of 5,000% if you bought stuff right when it was brand new. So why not try that this cycle too? As long as it's not full-blown memery that could get rug pulled and go to zero. Of course, that requires you to do a little research, but these days it's just look at the name. I mean, they're so cringy that you could just tell, like, oh, probably shouldn't speculate too much on this. Otherwise, it might literally be a temporary, pump and dump. But what we're seeing right now is this is just a pure speculative chart. There's nothing I can add. There is no prior chart history that I could really work with here. It's just a play based on the esoterica of the year. I can't add too much of my own feelings as to where I see the future of this project, but I can say that we do have a fib pull right now. We have the linear level at around 255, and then we have the logarithmic level somewhere around 330. So I entertain that a $3 to $4 Jupiter is in the cards. And then remember the gematria of Jupiter. We have that 27 and we have that 36. Those are powerful numbers. So $2.70 and $3.60 makes so much sense to me, especially with this fib pull swing high to swing low. And of course, this could go a little deeper, but that 1618 brings you perfectly to around that 360-ish level. I don't know if that'll be the top, though. We have to see how this bull run goes. If the alt season is as wild as the last cycle was. But this is like, I don't even know, 0.5% of my portfolio. I don't have too much in there. Let's go to Chainlink. This is a long time hold for me. I've been in this project for a long time. I remember I actually de-risked it twice in the last cycle at $45 and $54, and that had to do with Gematria. So we had 45 and 54 in the Gematria, and I sold it at both of those levels. And it was one of the first times that I was like, let's really put this Gematria stuff to the test and not just talk, right? But I remember that vividly. That was amazing. I had a lot of Chainlink in my portfolio below $10, so that was a pretty successful play. And then I also bought some Chainlink again. I forgot what level I got in at, but it was, I want to say below the $8 level or around the $8 level. And then of course we've had a breakout since, but it's been chopping a lot since November. So we're around 230 days of chop and sideways, but the 382 is everything. So holding that 382 makes sense. I would personally be buying Link. I would still be buying Link around this level right now. I can't really say too much more to that now. We have, obviously, we can measure prior cycle to the prior cycle's top, which isn't a whole lot, but I think this is one of those players that's here to stay and here to just keep growing over time. A lot of partnerships, a lot going on with Chainlink. I wouldn't even be surprised if a Chainlink ETF was passed in 2025. I would not be. Similar kind of idea to Matic, Polygon. Two really huge players in the space that I think are going to be dominant. But yeah, Chainlink is a long-term hold for me. Happy with this. Let's move on to, also thing about Chainlink. I'm thinking for some big year of the snake connections. It would be surprising if we can get to $100 Chainlink in this cycle, but I feel like it's possible. I really do. I mean, let's look at the C19 level. This thing went up 3,000% from the C19 level, but here was the all-time high of alt season in 2018. This is the real cycle for Chainlink. This was it. This was where most things bottomed out in the 2018 cycle, near the very, very end of 2018. And this was the end of the alt season cycle. You could see it lasted about 880 days. That was a 27,000% move. So from where we are at this local bottom to $100, let's see what that is. It's only 2,000%, or 2,000. Yeah, it's only 2,000%. Excuse me. That's not that crazy for Chainlink. I could entertain a $100 Chainlink for sure. Let's look at Cardano. Wow. Oh my God, amazing. Okay, so we had this trend line here. And now we're back testing it. So this is a great level. Anything below the 236 should be solid. Great. Let me extend this a little bit. The reason I'm not entertaining this flash correction right here is it's just an issue with Kraken Exchange. This is really the low. It's like 24 cents. Now from this level right now to where the prior cycle is about 700% almost. So that's a nice amount of upside. And also if we look at the last cycle, the way that this behaved with the 382 was your backup phase. And now we're even below that now. We barely got above the point. We didn't even get above the 0.5 fib. So keep that in mind. The next big move for Cardano would be right around like the 150-ish range, because it never made into the golden pocket. And I suspect if we make it up there, we might flash down to like $1 again, because that's a psychological level, and then it will continue. And we saw that shit happen in the last cycle too. You see this, how we moved up very explosively, and then we had this big sharp back test, and then like another slight move to the upside. I could see something like that being like the energy of the next phase for the entire altcoin market. Like during Bitcoin's initial price discovery, we see a lot of stuff jolt to the upside, maybe not break all-time highs. Like obviously ETH will break highs, Solana will break all-time highs, but not everything will. And then it'll have a deeper correction after that. Not like a crash, but like a good way of explaining it would be, imagine Cardano moved up to the 702 fib, and then it came down to like $1, then continued, something like that. Another 40 to 50% mid-cycle correction is definitely possible after another bullish phase. We're not finished yet. Let's go to theta. All right, theta making it back to the middle of the 382 and the 236. That's amazing. How much correction has it been? Jeez. Okay, 60%. That's awesome. I would consider buying more theta here, personally. Definitely below the 382 and pretty much backtesting the 236. And that 236 level, if you look at the wick, it was boom, boom, boom. We're just backtesting a level that we were getting a lot of resistance on. So if we did come all the way back to 120, it's just one more strike to the downside. I think that's about as deep as it's getting. And then we should continue on that bounce. And then you'll see a lot of expansion in theta once it could get past this 618. So since we were able to almost get to the golden pocket, it's really that 702 that's big. And I think $5 is a psychological level. 5 to 15 could happen very, very quickly. And it's because we've seen it in the past. This move from 5 to 15 is pretty quick. Now, in the last cycle, we don't really have enough data to work with, but we had a very long sideways choppy range followed by this C19 correction. I think we might be something in here right now. Like we had this really quick rise in price right there, and now we're in this like backup phase of it. So we might, I don't want to say we're definitively in the backup phase, but we could be for like the whole altcoin market. Let me quickly move over to just check on total 3. Okay, beautiful. Total 3 made it down to these red lines, and that's what I said. If we make it back to those, especially this lower one right at the 0.5 fib, then we're in like buy zone. And then I said by the end of this red line, or the end of this box, which was put at September, we should be through the red box. But we could come up here into July, get rejected again, and kind of have something like that and be trading inside of this red box, leaving it before October. Wouldn't shock me if we could get above this 786 by the October solar eclipse. So quick note on T-Fuel, because that's been chopping around. All right, we had this major trend line support all throughout here. You could see it was in play for a very long time, 200 days. Then we shot up into our all-time high, or the buying climax, came down to it for the selling climax, chopped around a bunch, and this trend line has still been in play. But look at this. It would be fair to put it right around here, the fib, even though I know it went a little lower there, but this is more touch points. We've pretty much hit the 236. So this is as good as it gets usually on these corrections. And let me see how much this has been. Okay, 50%. 50% pretty much. That's good enough. Especially it never made it up into the golden pocket, but it did at least get above the 382. What this means in plain English is every time we get below this trend line, it seems to be a very solid time to buy. Now, from the current levels to the prior all-time high is about 800%, and this one rides on the movement of theta, of course, considering it's governance token. So if you're going to have like a 3% position in theta, you'd only want like a 1 to 1.5% position in T-Fuel. You wouldn't want too much of this because it's very, very speculative, and it's an absolutely ugly chart with very little history. But here's your C19 crash area, and here's where we are today. So 4,000% higher. This was way better to be in than something like Algorand. Okay, so keep that in mind. Theta and T-Fuel in the grand scheme of things are looking amazing. The same thing with with the Chainlink play that we talked about a moment ago. All of that stuff is done much better than the ISOs. So I have much less in the ISOs than I have in Theta, T-Fuel, V-Chain. Just to give a couple examples. But that's not anything outside, like that's not me trying to make any point here. Like I shared that I am also in the ISOs, and that has its own reasons too, right? It's part of the investment thesis. Let's move over to V-Chain. Speaking of V-Chain. Ooh, okay. So we broke through a very clear trend line. and even back tested it on the outside, confirming it as resistance, prior support confirming as resistance. And this was at least 3 weeks, right? Yep. Okay, that's clear. And we had this red trend line that we broke below, and we're even getting back below the 236. So yeah, this is dramatic right now. And like I said, buy the drama. Yeah, this is looking pretty good. I should remove, I don't love having these types of trend lines on my charts. It just makes it so messy. Let me see. I'll go up to like October and then I'll stop. Yeah, it looks less ridiculous. Sure, whatever. It's not that important. It's just it's an altcoin, so it's not going to be perfect. But we did get to the 1618 of the last cycle. Imagine we could do that this cycle. A $1 V chain would be crazy. From here to $1, we're looking at about, yeah, I don't know about that. But we do have the 1618 sitting around $1.85. I mean, that would be crazy. $1 would be also crazy. 4236 is sitting like right around $1, I think. Yeah, I believe in it. Yep, that's possible. $1.14 at the at the 4236. So that move right there, just getting back to all-time highs, is around 1,000%. Fuck. And then to make it into the more extreme in the data, I wonder if this alt season's really going to be that wild. Like, a part of me believes in it because during the dot-com bubble, we were in the year of the dragon, right? Like during the most speculative year of all time for that particular asset class. So I'm open to it. I really am, you know, like, but I think this might be the last crazy alt cycle we get. If we're going to have a really wild one like we had last time, I'm just being honest. It's not to break people's hearts, but it's another motivator to like get your shit together for this cycle, you know, for real. All right. I can't really add too much that I haven't already said, but I do like being around the 236. You heard me say that a bunch of times. That's a great level to buy at. So this is a chance for accumulation on VeChain. Quickly peek in at Vito. Oh, wow, we haven't even made it back to the 236 yet. So this is at least 60% correction, I would assume. Yes, 65%. This is pretty extreme. So this line right here, anything around this line was perfect. I shared that in the what I'm investing in special. So this is where you buy this right now. It's already had its first surge, mid-cycle correction. Next one will be up to the 786 to 888. That'd be 2 cents. So that would be the next big surge on this project, about 2 cents. And going from here to that level, let's just call it the prior all-time high, would be 1,000%. So, wow, right? To have very little go a long way in these speculative alts is the way to build portfolios. Vito also has this thunderbolt symbolism, which is a symbol of Jupiter, and we're in the Jupiter year. So keep that in mind from a symbolic perspective. The same thing with T-Fuel. Okay, T-Fuel being the flame. We're in the year of the dragon, tied to that symbolism as well. So let's go over to Sand. This is a project that I did pick up a venture capital position in. Perhaps got in a little too early, but I don't care because it's like so little of my portfolio. It's just a little bit of exposure to have fun with this sector. Yeah, okay, so we have about 2,005% to prior all-time highs, and this thing is about to double bottom. So this is as deep and as dramatic as it gets usually, unless we have a spring phase. If this is to have a spring phase, that would be very problematic. But what is it, 98% down? Yeah, it's 96% down from prior all-time highs, so yeah. Not the greatest investment if you got into it a year ago, but could very well be something that does nice in the next alt season, even if we just get back to prior all-time highs. I mean, shit, even if we just get back to the golden pocket at the 786, that's 1,000%. So yeah, keep that in mind on these plays. Like, you don't even want to consider price discovery on this stuff. You're just looking to have a big conservative de-risk target, so that way you're able to take advantage of it. And of course, you don't sell it all. Keep some. You never know where this stuff can go. I mean, if I had to give some utility here, I would at least be, especially if Bitcoin starts keeling over and we're in the final kind of alt season energy, and this thing is only around the 786, I would start heavily de-risking. But if Bitcoin is on its way going up and this thing is just spiking straight through the golden pocket, then I would hold. So it really has to do with the energetics. But there's nothing wrong with entertaining a slightly new all-time high for the cycle, because that's what happened to a lot of stuff in the last cycle. Not everything just kept going up and up and up. Some stuff only made it up about like 100% higher than the prior cycle highs of 2018. Okay, I could probably find a couple examples of that. There's not so many I could pick up off the top of my head. But there was also a lot of projects in the last cycle that did not even make it to new all-time highs. They only got to like the top of the golden pocket or the 888 fib. Okay, I think, what was it, Dash, Stellar Lumens, XRP, I believe that happened to a bunch of projects. So that's why I like to see, if I have 1,000% or 2,000% to retesting all-time highs, I don't even need to build in a strategy that's based around price discovery. It's a lot more healthier and less degen. Let me see, Aave. Okay, we got to wrap this up soon. We got a couple more charts to go. We have Aave sitting right around the 236. I don't really think it gets much better than that. This was an insanely profitable project for the last cycle. I mean, here's your C19 crash, and you're up 4,000% since that level. Madness. So you could have bought anywhere around that last cycle and been still holding on through the lows of the bear market to this day and not de-risked at all up here, and you'd still be up 4,000%. Just think about that. Now this is on 700 days of sideways and holding the 236. Even though this could be perceived as a head and shoulders, you don't want to get too fancy pattern trading on an altcoin that's this deep into a cycle. But yeah, something to consider. Being around the 236 is one of the best last minute buying opportunities you can get. And then the next big surge level would be somewhere around $300. From where this is at right now to prior cycle highs is 700%. So that's a really solid opportunity there too. Let's look at this on the 4236, 2,000. No, I don't know about that. I do think $1,000 is in the cards for Aave this cycle if we could get our shit together and a lot of liquidity can pour in. Although that is another conversation. It's like, where will all this liquidity come from? And I think it has something to do with more ETFs being approved could lead way to it. But maybe that only works for some projects, and then that spillover is what we would have to speculate on next. For instance, if we have an Ethereum ETF launch, a Solana ETF launch, maybe even an XRP ETF launch, well, that definitely helps getting institutional money in. Then once that institutional money comes in, I believe it's going to flow the same way that it always flows. It's going to peak out after we get to like a buying climax level, wherever that is. And then it's going to roll over, and it's going to roll over into stables. And then those stables are going to be deployed accordingly. And there's so many trading bots that these institutions have. I mean, they're going to do whatever it takes to squeeze out as much juice from this fruit as humanly possible. That's what they always do. And I'm not even just talking about the hedge funds. I mean, they're going to do what it takes to even get retail involved in however they can. That was the FOMO phase of 2018. I don't see it being any different this time, especially when we see the similarities between the 2017 cycle and today. We could have another 2018 like alt season. So yeah, Aave in buying territory as well, and has incredible chart history to back it up. Also, the symbolism of Aave is that greenish purple. I've talked about this with Solana tied to the Aurora Borealis. That's another keynote to consider for next year, for the year of the snake. Solana has the snake symbolism as well with the S. Let's move over to Cosmos really quickly. Some quick notes on that. Okay, can't really talk too much. We're just back at the lows of the prior cycle, prior bear market. So now this is at 700 days of being at lows, and this 0.5 fib is a hell of a level. Cosmos needs to breach that level, and until it could get above $16, it's just perpetually being held down between this $5 to $10 level. Hasn't really spent much time over that or under that. So yeah, you guys want to keep this in mind. Has some decent chart history performance though since the C19 crash, at least 250% above. How much to go to the prior all-time high? So this prior buying climax is only 600% up. So this is, again, something like a 1.5% position in your portfolio. Not something you'd want a ton in because it's not enough hype around this. Okay. All right. We got Gala. Where are we at, Gala? All right, yes, similar situation across the board. We're getting a lot of these sub 236 coins right now. We're 50 to 60% down from the prior cycle peak. Yeah, this is awesome. So from here, what is it, 2,000%? Yep. 3,000% to prior all-time highs. So yeah, you want to be careful with this stuff in large percentage of your portfolio, but these types of mid-cycle corrections are huge opportunities, and getting below the 236 is a little bit more dramatic by the drama, and we've made it into oversold territory on the RSI. I'm sure there's a lot of other things that have facilitated this whole gaming sector to take quite a hit, and it was a lot of speculation early on in this cycle went into AI and went into gaming and only kind of distributed into a couple of things, and then really speculative new meme projects came out, and that got a bunch of liquidity in it because it was exciting and it got a lot of attention. But this stuff that was in the prior cycle, maybe not so much the same attention. That's one of the reasons why I'm getting some venture capital positions in this stuff. Similar sector, but not, yeah. The hype stuff is fun, but it's very, very tricky to play. And the alt season doesn't go usually how a lot of people would like. So I rather get into something that I know is oversold and has a shit ton of ROI to the upside just to get back to prior all-time highs, and I can feel confident in de-risking up at those levels. That's more my thesis. It's a little bit different of a strategy, but it works for me. Okay, let's look at Zilliqa. I don't know if we covered that in the last podcast. Wow, okay, we've made it back to the bottom on Zill. So this one I did not put too much emphasis on compared to the last cycle. The last cycle, I talked about it a lot. And I did sell it actually on this peak. I remember that vividly. But I have not really talked about it too much since. It's not a huge player in my portfolio anymore. It's really always been venture capital, but now it's probably only like, 1.5%, 2%. Let's see what it's like going back to the prior all-time high. Okay, 1,300%. And remember earlier I said, some projects barely broke all-time highs. Well, Zill is one of those examples. So you had the 2018 cycle top, and then this was your 2021 cycle top. And coincidentally, like exactly 4 years apart. No, sorry. 3 years apart, excuse me. Now we're surpassed that time frame because that was about 1,000 days. We're so much, what are we? Yeah, 1,100 days. Crazy. But this was an amazing bull run right here, about 6,000%. And you see from the C19 levels to the current levels, we're still up about 400%. So not the worst thing to be holding today if you didn't even de-risk it in the last cycle. But yeah, not the same kind of investment thesis for me this time around as I had last time, because of course I learned from the last cycle. I've shuffled up things in a different way. I've become a lot more of a sophisticated investor. I've become a lot better at decoding. And I wanted to play this cycle a little bit differently to experiment, but not be too extreme. So yeah, I don't have too much new positions in Zilliqa, but we'll see. I don't know if I'll add anything a little bit later if I get some more bullish confirmations. But the fact that it's made it all the way down to the lows again, it's kind of telling me that was smart that I didn't get too hyped up on this one this time around. Again, learning from your mistakes and then not being so egoic in the process and actually taking notes and saying, well, let's refine here and change. I'm glad I decided to. I'm not bearish on Zilliqa, by the way. I'm just letting you know. But yeah, still quite an opportunity to the upside. If this thing could get all the way back to prior all-time highs, we're only looking at 1,300%, and it's made it back to that 20-cent level before. So even if it could only make it back up to 20 cents from where it is now, you're looking at 1,000% move. Not bad. Not bad at all. So keep that in mind. ZIL is not dead. It does also have a technology that solves a problem that Ethereum had, which is sharding. So it's so funny to say that, but you know what I mean. Scalability. Smart contracts, scalability. Okay, well, now we're going to finish off today's podcast with Polkadot. All right, so Polkadot is in basically the same situation as, what were we, Aave, right? Right below the 236. Same. Right below 236, had a little bit of a peak above the 382. Polkadot is an entirely separate ecosystem in and of itself. Some of you might be aware of Kusama, built on the Polkadot blockchain. This is important to be aware of because now we're in a new cycle and ETH is still a main player in the game. We know now with the Ethereum ETF approvals and soon to be launch. So I never was a proponent, like a believer in an ETH killer. You know, Solana was probably the one that was promoted as such. I don't look at it that way. I don't think that's how this works at all. I think there's a mythological story at play here, but Polkadot does really have a fascinating technology behind it, and I can see why it needed to be in my portfolio to balance things out based on the big picture and the future of blockchain technology and the tokenization of the economy and eventually tokenization of the stock market. So this is great to have along with probably Solana and Avalanche as like supplements to the development of this Aquarian economy, as I like to call it. But from just the money-making side of things, prior all-time high, about 800% away from where we are now. We're below 236. These are a lot of things that are telling me that this is in a buy zone, right? Or an accumulation zone, I should say. So I'm going to wrap this one up here. We went through so many charts. I covered everything. Can't believe it. An hour and 41 minutes. We did it. I appreciate every single one of you. If you've tuned in all the way to the end, if somebody wants to timestamp all of the altcoins, go for it. That'd be great. We'd appreciate your service. I hope you guys appreciate the decode that I shared in the beginning and going through all of these charts. What a chaotic week it's been. It's great that it's coming to a conclusion and I was able to schedule out this very special podcast for you all. I appreciate every single one of you, and I'm hoping you have the best rest of your week in the Matrix. Much love.